Okay, welcome everyone. We'll start our lesson 3. Today lesson will go through LO3, which is main learning outcome 3. As you know me, my name is Anjum Sattar, and today lesson will be our discussion about LO3, which is be able to account for capital gain tax. Okay, capital gain tax is very key topic in taxation, which we'll do a bit discussion. And you can pick example of capital gain tax from the booklet which I shared with you, and I'll go through few bit and pieces and some the rates how we can apply them. Okay, so until now we had a discussion about types of tax: income tax, non-saving, saving, property income, personal allowance, and we discussed about value added tax. We had a discussion about popular people chat in office, which is mean ethics, professional behavior, professional competence, due care, confidentiality. I is known as the integrity, and O is the objectivity. So we never compromise these as a professional accountant, and we should go through these. Okay. Today lesson indicative content, what we're supposed to learn: be able to account capital gain tax, chargeable gain, allowable asset, allowable person, who's connected person like family, husband, wife, chattels like it can be very antiques product like you have sceneries or horses, and those are also treat as a capital if their values go up. And calculation of the chargeable gain and allowable losses, which we will go through. The losses can be transferred up to 6 years plus current year. So that's 5 years plus current year. And again, the losses arising from disposal shares. We are selling share, the value of share indexation, how we can index because share we buy at the different times, and calculation of the capital gain tax, personal allowance, and bands, which band your tax falls. That all will be. So always good to be when we start any activities, good to reflect how much about our current knowledge about the capital gain tax. Okay. So the definition about the connected person for these purposes includes spouse, civil partners, parent, grandparent, and remote such as ancestors, children, grandchildren, further issues, brothers, sisters, spouses, civil partners, most of these, relatives as well. It is therefore encompasses most close family members. Chargeable asset include the personal possessions, which is worth of more than 6,000. Any property which is not main home or the shares, rather than those held tax-free scheme for investment or the business asset, allow costs in working out the chargeable gain. You deduct any allowable cost. So cost we need to be look around each under each year's fund, and fact we have allowable cost, the cost which we can recover and reduce the tax liability. Okay. What is capital gain tax exempt from capital? So private motor car, including vintage cars, these are exempt from the capital gain tax. Gift to the UK registered charities, if you're giving, those are exempt to the capital gain tax. Some government securities, personal belonging, or the chattel, sales proceed, or the value when given away are less than 6,000, those are exempt. If it is more, then you have to pay the tax on it. Prices and the bidding win, it can be exempt, like you have a lottery, national lotto, you're putting bid on the horse race, cash asset held in under investment saving schemes, yeah, accounts, ISAs, that can be exempt. Okay, so income tax overviews, properties, we can look around the resident in UK. Automatically non-UK resident tax apply. Individual in the UK in the tax year less than 16 days, 46 days, not in the UK in any last 3 years, or 91 days working full-time abroad, that is automatically known UK resident tax. Automatically use UK resident if you're living in the country 183 days. In the tax purposes, you become a resident of UK and only the home in the UK and work full-time in the UK. Sufficient ties, close families in the UK, spouse and the civil partner, accommodation in the UK, use in the tax year, substantive work in the UK, days in the UK, 2 years, uh, 90 days, yes, in either years, and country ties most of the time spent in the UK. So that leads all, the tax. Okay, so previous resident UK are in one of the last 3 years. See the tax liabilities. You don't have exam, so no worries about exam. Not previously resident, not in the UK any last 3 years. Consider first four ties. So we can say this is person apply the tax. Okay, then we have a 3.1 assessment criteria. Explain the difference between chargeable and exempt asset. The capital tax gain taxes is charged when the chargeable or the disposable chargeable asset, and we have a chargeable person are the resident of the UK, and then of course we can charge the tax. A chargeable disposable include the disposable of and the gift of the asset. However, the transfer of an asset upon the death of exempt disposal, a person who inherited inherent asset take it over its value at the time of the death. How much was individual pay the capital gain tax based on the chargeable gain for the tax year, and the chargeable gain require three essential elements which we'll go through in a minute. Anyone, any question, please, if you have? Now, okay, disposal, we can look around sales, gift, exchange, loss. Okay, exempt disposal to charities on death, so don't have a tax to pay. Okay, we can look around the chargeable gain. The gain is a British term which is increase in the asset value between the time of the purchase and the time of sold. It's become subject to the capital gain. Okay, the chargeable gain can be offset the chargeable losses when you have. UK taxpayers are allowed to reduce the chargeable gain by taking inflation into account, also known as indexation allowance or the shares or other assets. So rates for the capital gain, so lower rates, the higher rates, we can look around like 2019 unchanged 10% and 20%, and the residential property rate also unchanged during the years, and we can further explore about following years according to the Finance Act, which we can look around. Fully covered by the principal and private resident. So chargeable gains are the tax at the lower rate is 10%, 18% will fall with the basic tax band 37,500. At the higher tax band, when you have the 20% or 28%, where they exceed the threshold, the basic rate band is extended and the personal pension contribution, make gift aid donation that can be exempt accordingly, which we can look around under each category. Resident income tax, professional responsibility for the tax advisors, national insurance contribution, tax system, tax avoidance, tax avoidance, and tax planning. Tax planning is illegal, tax avoidance is illegal, tax planning we can, but we need to look around the moral principles as well. Domestic. Okay, exempt person disposal and asset chargeable gains, capital losses, annual exempt amount which we can and the rates we can apply. Okay, pension, chargeable pension, individual companies pay corporation tax on their chargeable gain and exempt pension under the charities and the schemes if you're giving. And the asset, chargeable asset, any capital asset which are not exempt is a chargeable. Exempt asset, private residency asset which you privately use, cash, motor cars, certain chattels which we can look around in a minute. We list out gambling, lottery. We said all these are exempt. I said yes, that's the government. Chattels is a tangible, movable property. Then we have vesting chattel, which is exempt. Expected useful life is less than 50 years. Animal encountered in the assessment are to be taken as the vesting chattel. No chattels bought and sold greater than 6,000 and expected life is greater than 50 years. Example, antiques, jewelry, and painting can come and we can pay the capital gain tax. So this is the pro forma we use chargeable gain for the year plus the current year's capital losses if you have net chargeable gain and less annual exempt amount which was 12,000. Now we have 12,500 and so on, which we can explore further. Okay, if we have a previous year capital losses, we can brought forward. We can say chargeable gain for the tax. The amount within the basic rate band 10% and the higher band is 20% on the capital gain tax. Okay, guys, any question? No.
No, not so far.
Okay, so then we can look around 3.2, explain the difference between chargeable and exempt. The chargeable person, individuals, companies, corporation, chargeable asset, all asset, unless they are specified exempt, sales, gift are the whole part of chargeable on disposal of the asset. So we can proportion it according to the formula. We can find the values and we can charge accordingly. So capital gain, no CGT, capital gain tax, losses, no relief. Example, motor cars, chattels, steam chattels, horse, dogs, and the principal private residence. Yes, share held under IFA investment scheme, those can be exempt because the tax that's a special government scheme. Okay. Okay, so what we can look, transfer a debt on the debt, the gift or the charity, that's which we need to be look around connected person and we giving to the charities, it can be exempt. So we can look around the example. Emma has chargeable gain for the selling quoted shares of 33,600 during the tax year. Assume Emma and taxable income. Emma has 4370. Assume Emma has a taxable income 27,855. So we look around the chargeable gain now. So for Emma, annual exempt limit is 12,000 was in the year. So we can say chargeable gain is 21,600. Tax need to be paid. If is a basic taxpayer, it's a 10% tax was on capital gain tax. We can look around 33,130 minus assume amount has a taxable income which we can take out from. So that was the remaining and CGT it's the capital gain tax liabilities 10%. So we can look around working accordingly. So unused the basic band rate unused, which is not being used because 37,500 we can look around. That was the limit, and now 27 being used towards M as other income, taxable income. So remaining was 9,645 for the basic interest rate that 10%. The remaining higher band rate will go 20% and his liability for the capital gain 3,350 £6 supposed to pay the tax on the capital gain. Any question? Okay, so please, that's the way we can calculate the liability. Then if you're using selling the part disposal, so please we use the formulas. Cost the part of the asset disposed, allowable cost of the whole of the asset, how much was A divided by A plus B. So A was the proceed part of the sold. So then A plus the market value of the remaining part, so which we can add them together. Asset being lost, any assurance, damages received, no assurance proceed. If the asset replaced within a year's claim, no gain. The loss arise, we can use the formula. So that was the formula as given. So please, keep in mind, and we can revalue our asset if asset being damaged. Use the not according to our own judgment, professional chattels we said earlier. Yes, movable painting antiques. So sale proceed up to 6,000 or less can be exempt. Normal competition, but the gain restricted to, so we can say 6,000 times 5 divided by 3. Gross proceed, how much we have, minus your 6,000 exempt. And if it's more than that, then of course normal capital gain or the loss will be applied and rules. Okay, so that's we have. Then we have a connected person, as we said, spouse, families, which we explained in the previous slide. So you have to look around is come under the connected person or not. If not, then of course different rule apply. So where the shares or the type of the company has been acquired through the more than one purchase, the rule or are needed to be identified which shares has been disposed of. Shares of the same type are matched as follows: some day acquisition in 30 days after the disposal, acquisition of the shares, and sometimes a few days, few hours really matters, and we do the indexation. We can say how many shares we purchased, how much cost we have, different dates, how much shares we disposed of, and how much is we can carry forward. So we can do our working, and then if we have sometime in shares, it can be bonus issues. Yes, the free shares you receive, and then of course the value of the share, how they can impact it, and those we also need to keep in mind. So right issue, if you have 1 in 3 or various other rules can be set in the company, and those we need to look around. The principal, private, resident relief throughout the period ownership of the shares greater than 100% period of ownership. So that's we can calculate and we have to do our rates accordingly. So exempt proportion capital gain period for occupation including deems occupation and the type of period ownership which we have, and the period of occupation are the period actual occupation and deem the occupation which we can last within the 18 months up to 3 years any reason, and the shares and those rules will apply. Okay, then we have 3.3 calculate the capital gain tax payable and individual from the data. We've been given the data here, chargeable gain, other residential properties and result chargeable gain which we have in case of Douglas. So residential property gain have 39,500, annual exempt limit was 12,000, and we have in other gains we have all these. So we can say how much we have again, 27,500 plus 18, so total gain, and then we can do first 27,500 is 18% residential property gain. Then we have then the left limit for the basic rate 37,500, so 10,000 will be first 10% rate, and the remaining will be 20% of the capital gain side of the properties. Okay. The annual exempt set against the residential properties gain, capital gain liability identify alternative calculations. So 18,800 at 10% and 37. If we take out 18, what is the limit being left? That's the 18%, and the remaining will go 28% according to those were the rates, in the previous years. And we can calculate the tax liabilities. Okay, in order to offset the losses, although they're not changing the end result in fractions of the annual exempt amount brought forward and carry forward. Yes, the annual exempt amount should now to deduct or offset the current year capital losses, but before the setting any brought forward losses, we do first because that current years can be moved forward up to 5 years, and capital gain taxes will need to be calculated accordingly. So here again we have examples. I include a few examples, please. Capital gain we have, capital losses we have, chargeable gain we have now, and annual exempt amount it can be because the 12,000, and now we don't have to pay the tax because due to the exemption and the losses we had previous year. Okay, please, if you want to enhance your understanding about the capital gain tax, please, in the F6 of ACCA, I mentioned you can set up account, open tuition.com, which is free. Just Google it, ACCA capital gain tax year, let's say 2023 finance year, and you can find exactly the same, a lot of examples. And if you want to go through, please do so, or in your assignment purposes you can. And thanks for attending today's session. Hope I will speak to you during our next lesson.
Thank you so much. Thank you so much for everything.
Thank you, and have a lovely weekend.
Have a lovely weekend as well. Thank you. Bye-bye.
Bye-bye.